Yo, what's going on, guys? Welcome back to the channel. In today's video, going to go over the trades that we took on Friday as well as the game plan going into this week. So this is what we looked like on Friday. So right off the open here on the 30-minute chart on the Friday contracts, we had the 605 calls, and pretty much we ended up closing at a very key spot on Thursday, and you can see exactly what happened. We ended up getting a gap down, and we rejected that 30-minute 50 to a T, and the market couldn't flip bullish because on Thursday we were pretty much watching to see if this chart could cross and see if the market could flip bullish, and that didn't happen on Friday. And we ended up rejecting the 50, and the market was neutral at that point. And we could see what happened here on the put side. Now, if we flip to the puts, we actually ended up flipping bearish on the day. So we had this major gap down on Friday, which ended up crossing the puts, and the market really wasn't bearish up until the 50 flattened out. Like right off open, it did look like we were gonna flip bearish, just how we looked, but we still needed some time to see what the chart actually looks like when it crosses, see how the 50 is, and eventually that 50 curled and the market was bearish. When this is such a clean chart, I mean, this is so clean. You could just see, I mean, we got the 10 going above the 50, pulled back to the 50, and ripped right off of it, and that was the dip buy in the trend. So how you would have played this was very simple. So if we go to the 0-day chart, this is what we looked like right off of open. The 0-day charts, we had obviously the 598 puts is what we had for the put side. So if we look here right off open, we end up getting this nice put cross. These ones are a little bit harder to play. They're right off open, and we also did have news at 10, so probably was best to sit out of this. But a lot of the times we do get a move before news. So this pullback right here, again, it's kind of hard to play these ones because of like the gap between the SMAs. So if you didn't take this, I mean, it doesn't really matter. We got this nice 10 going above the 50, and if you did buy one of these dips, your risk would have been, I mean, it would have been too bad if you bought this candle right here on the open, because contracts were around like 0.90 or like $1 on the contracts we dipped to on this next candle, and the stop at the 50 was like 0.70. So if you did want to take the risk of taking this trade, you would have been paid. If you wanted to wait till after news, obviously, like this 50 dip was a little too early to take. I wouldn't have taken this just because the 30-minute didn't cross yet, and with how the 50 looked, you kind of need to see more time on the charts to see if we actually do flip bearish. And eventually we got the cross. Eventually the 50 did curl. That didn't happen until later in the day, but this is a trade that I took. I know Colin called this out. This was a very good setup, and I'll go over why. So if we flip to the put side or the call side real quick, look at this rejection off of the 50. I mean, this was super clean. So I ended up shorting the exact tap of the 50. So once we pulled up in the 50, I went short because we know the market is trending on the 30-minute. We got the 10 going above the 50. The 50 was flat, somewhat. It wasn't completely flat. That was the only thing I didn't like about it, but this was such a strong confluence in my opinion because we're at the 50 on the 0-day chart, and then we pull up the 30-minute. We were sitting right directly on the 30-minute 50, and then if you also go to the call side real quick, we were actually sitting right at the 10 SMA on the 30-minute on the call side too. So I don't tend to look at this too much, but still this chart was going negative on the 30-minute, and it was a very good looking setup because we got the pullback into this 50 or this 10 SMA / 50 SMA. Obviously we didn't come near the 50, but this chart was going negative, and then we're sitting at the 30-minute 50 on puts, and then we're sitting at the 5-minute 50 on calls. So a lot of things lined up for this trade, and that ended up marking the top for the day. I mean, this was a absolute, this dumped so many points. I think Colin caught like 200 points, and I think I caught somewhere around the same points as well because I just ended up holding runners and adding when the 0-day chart crossed on puts. So it was a very, very simple day on Friday. It was an easy read. If you just know how the system works, this is a very simple trade to take. If you weren't the biggest fan of it, you could have at least thrown lighter size on the table and just held for a bigger move. And if we flip to the puts on the 0-day chart, we eventually crossed right here on the 0-day chart. And we can see right here, 10 going above the 50, and look at the move we got. I mean, this was so aggressive. Again, market's trending bearish, so you could expect an aggressive move on the cross. And I averaged up on that short once we got on this candle right here, the 1425 candle, the 225 candle. I ended up averaging up on my previous short, and we caught a very big move. I mean, it's pretty simple day on Friday. 0-day cross on puts you could have caught, or play the 50 rejection on a 0-day chart, or that cross off of open. It's a little risky. I personally wouldn't be taking that. It's not the best trade in the world to take, but if you wanted to give it a go, you could have tried some because the market was pretty much almost trending bearish. We broke up with a 30-minute 50, so if you took a low risk entry, or not low risk entry, if you just went lighter size on it just because of the gap between the SMAs, you still would have cost some points. But it's always good to wait after 10 a.m. to take take some trades, just let price settle a bit, and see what we actually look like after, the first 30 minutes go by. But that's what we did on Friday. Very simple day. Going into the week, obviously, market's trending bearish on the 30-minute. If we look here, 30-minute 50 is 10 above the 50, trending bearish. If we look at the higher time frames, we are sitting at a little key spot here on the 2-hour. We're at the 2-hour 50. It is sloped down a little bit. So, if we did reject, I wouldn't be surprised. If we look at the daily chart as well on the call side of things, we are at a pretty key spot. So if we go to the calls on the daily time frame, this is not the right chart. This is June 13th. If we go to which contract was it? What are these? Yes, so you can see right here the daily chart. We're sitting right at the 50. I'm pretty sure I actually have extended hours on by accident, so we're actually sitting, I think, above the 50 at the moment. So this is a very, very key chart because this is daily time frame. It's super high time frame support. So if we did bounce tomorrow, really wouldn't be surprised because we're at the 2-hour 50, daily 50. But if this chart goes negative, we're probably going to see a pretty big move down. So going into tomorrow, focus will still be on the short side. If the market does lose its trend, obviously, then I'd be open to taking a call cross. But if we're bearish, like I said, 0-day cross on puts, 50 dip on puts will be a move. And then if obviously we go negative, most likely we'll be taking a call cross on the 0-day chart. So that's the game plan for tomorrow. If you guys enjoyed, drop a sub. If you guys want to learn, join Discord down below. That's where all the trades are shared, all the knowledge on the systems in there. So yeah, that's all I got. I'm out. Peace.